So looking at the Trump tariff tantrum, it was a very short, sharp dip, a fairly deep dip, which was well telegraphed. We did see markets generally trending down across the world in the lead up to it, as nobody was quite sure what was going to happen. April 1 comes along, and then Trump chickens out, markets recover, and governments around the world are making trade deals with the US. So it was all over in Australia within a month. The US took a little bit longer, it didn't recover till July, but we've still ended the year on a strong note. A little bit off the October highs. By all measures, that's a strong response. And of course, again, a very strong message here says staying the course is the key to get these returns out of the market into your pocket. The other interesting thing here is a bit of a complex graph, so I'll take you through it. We spoke a little bit earlier about most people, and so if you look at the right-hand side of this graph, the 14 odd years from 2011 to today, the blue line is the difference between US and the rest of the world. Blue area above the zero line shows the US outperforming, and the blue sections below the line shows that the rest of the world outperform the US. And the black line is just a 5-year rolling return. So you can see that it lags the blue area. What this is showing is that US outperformance is not preordained. It's certainly been true for the last 14 years. It wasn't true in the first decade of the 21st century. And it wasn't true in the 70s and 80s necessarily. These things go in cycles. Equity returns are broadly linked to GDP growth. And so over time, you expect this to revert to the mean. So US exceptionalism cannot be assumed going forward. It also means that timing the market, so choosing when you would have got in and out of the market based on that sort of February to April decline, and when to get back in again, extraordinarily difficult exercise to pull off. And ultimately, diversification matters. So I think they're the 3 lessons we should take from 2025. Not suggesting that the US is going to fall significantly in the next period, but we should probably be expecting to see lower returns out of the US than we'll see in the rest of the world.